just before we move on to the equity space, Nigeria's trade minister says private sector funds are required to bridge Nigeria's huge infrastructure deficit. To provide some insight on the potential of small and medium-sized funds to contribute to this, I have in the studio Toyin Banjo. He's the CEO of Oriental Capital and Asset Management. Toyin, thank you so much for joining us. I want to get your thoughts, first of all, on, I mean, it's a huge gap. I guess it depends on who you talk to in terms of the numbers, but definitely a huge gap. And maybe we can talk about what kind of specialized funds that can be created to approach this infrastructure gap. Clearly, we have huge gaps in housing, we have huge gaps in transportation, and of course, power.
Okay. The Nigerian infrastructure funding gap deficit is actually, according to the World Bank, is actually about 3 trillion.
Yeah.
The gap is so huge that not even the government or the private sector could handle them separately. So now the option we have is actually the administrator of the two. We have the various funds that we could actually use in driving these deficits. We have the health fund that could be created.
Yeah.
We have the power fund. We have the energy fund. We have the real estate fund. And we also have the educational fund. Those areas are very, very critical to the attainment of the Millennium Development Goal.
What size, what type of fund, in terms of size, what is the size of the funds that you think can be created in the context of where we are as a country?
Yeah, there has been this erroneous impression that an infrastructure fund must be very huge for us to be able to attain that goal. And we are of the view that there is what we call the mid-sized funds that we can actually create in the Nigerian economy to actually put a foot in the door. We will have the size of a $20–30 million fund. For example, for the new revitalized power sector, there is certainly going to be huge funding gap for the value chain for the power sector, i.e. the service provider, the metering companies, the transmission companies, the support services companies. They will need a lot of money.
Right. Well, a lot of people, when I speak to them about setting up these funds, one of the challenges one of the things that they bring up is how do you approach projects? For instance, you could either raise funds for greenfield projects or existing assets. And they said in the Nigerian context, the risk of investing in greenfield projects, even though we have such a huge deficit, is pretty high. I want to get your thoughts on that.
Well, the argument is neither here nor there, I would say. I think before I take on your question, I should actually dwell on a little bit on the models that we have that could actually be exploited by the system. We have the PPP, which is what we call the vanilla, the PPP model, where you have existing assets of the government, and that has been used severally in the Nigerian space. Okay, for the ports, privatization of the ports, privatization of the aviation sector, and all the rest. But we also know that we have also used the subnational debt, whereby we are in the states. The state governments have gone to the bond markets to raise funds for their infrastructural needs and all the rest. But we haven't seen so much of those specialized bonds yet. And I've just talked about those sectors that we could create them.
Right.
I mean, for example, we do know that in order for us to raise the standard of the health sector in this country, the government cannot do it alone. There's a need for us to develop those health bonds, very, very imperative, that will encourage medical tourism in Nigeria, and also save the huge foreign exchange.
Right. But coming back to the point about greenfield or existing projects, your thoughts on the risk of greenfield?
Well, the greenfield, I mean, there's nothing wrong in funding a greenfield project, actually. I mean, what we just need to do is to sit down as a country to agree the model we want to use. The greenfield project will work if government, through ICRC and the BP, and they agree to say, okay, we would, through the DMO and all the other agencies involved in this project, to provide what we call a government guarantee. Government guarantees are very critical. I mean, they are enablers of engine of growth in the Nigerian economy. You cannot talk about a huge gap of about 3 trillion, and did not talk about the government coming in to bring in all sorts of guarantees without having to put pressure on the budget appropriations and the budget financial commitment of the government. We all know what is happening in the oil market and all. So those guarantees are very, very important. I mean, if we have those mid-size funds for those various sectors, and government comes in and to say, well, we would guarantee them.
Okay.
I mean, that would go a long way in ensuring that we succeed on that.
I really have to wrap now, but very quickly, when do you think we may see one or two of these funds come to market?
Well, I'm aware that in the industry, in the investment banking realm, we have about 2 or 3 that are already with the regulators, with the SEC for approval. By first, second quarter next year, we would have one of those mid-size bonds fund. It's also very, very critical that, like I said, I mean, one of the ones that will come out quickly is the power fund.